The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got some ADP jobs numbers, and you got markets in higher territory. We're talking about records right now in the S&Ps, up by another 1/3% or 20 points in the positive at 6,085. NASDAQ 100, we're up by 165 points or about 0.8%. Now the NASDAQ 100, yeah, it just did it. We're talking about all-time highs yet again. Look at that. We had a high out there of 21,340, and you accelerate over that high right now. We're talking about all-time highs in the NASDAQ 100 at 21,447. Dow, just below that level. We're up 176 points or 0.4%. We're right near 45,000, and the Russell right now positive by about 4 points. Bitcoin, that's a weekly. Let's put it back to a short-term time frame. You were above 100,000 on Friday. We've just been chopping around between about 96 and 98. We're trading at 96,630. Crude above $70. Quite the acceleration from Monday's lows yesterday. You accelerate to above 70. We're holding on to $70 in crude. Gold's up $3 this morning. You see the volatility there. Up to 26.71. We were just trading at 26.54. Right, and then you jump to notes and bonds, and we got a little bit of lower price and higher yields coming at you right now. We got the 10-year, excuse me, negative by 12 ticks. The 10-year, 4.28, just like that. 4.28. Yeah, you're talking about almost a full move, a full point, excuse me, from where we were yesterday. You're at 110.19. You got lower price, higher yield. That is putting some strength into the dollar as you're up 600 ticks on the dollar at 106.689. It's the most interesting relationship in this market going on right now, right? Whether it's yields, whether it's currencies in terms of the dollar, and that, of course, impacting gold to some degree, but gold holding up relatively well yet again. You have dollar strength up 600 ticks, and in the same time frame, you got gold actually up $3 as you chop around a bit at 26.71 right now. All right, we jump around, so we got a little bit of a teaser or a little bit of a precursor, better word, for the action on Friday. We get non-farm payrolls on Friday. We get private payrolls this morning for the month of November. You're talking about 146,000 jobs added. Wages, one of the most interesting parts of this. We've talked about it before. Remarkable wages. Nobody complains that they're getting 5% raises every single year if they stay in the same job. Inflation's not at 5% anymore. Okay, there are lag effects. Rent might be going up 5%. That's a big problem in the CPI for sure. But inflation overall is not going up 5%. And meanwhile, you have numbers, excuse me, there's the chart I wanted to get at. 146,000 jobs added. Look at the wages. We're going up. That's not going down. The number is going up. 7.2% raise if you change jobs. 4.8% raise if you stayed in the same job. That is a remarkable number, and I'm sure the Fed keeps track of it. And you got strong numbers with jobs being 146,000 added. Now, non-farm payrolls, you're looking for 200,000 plus. They have that number down here. I was reading it earlier somewhere. All right. Yeah, the non-farm payroll number coming out on Friday, I was just reading it. They're looking for 200,000 plus. Private payrolls up 146,000. Now, what's interesting on the non-farm payroll Friday, that number is following an October number where we only added like 12,000. Remember that? That was a tough number on October. We're going to come into November. October had some hurricane volatility, some weather volatility in there, among other things. We had a strike going on. You're going to see a little of that volatility in November coming down the line on Friday, but the bottom line is this economy is strong, man. You're not paying wages of 5% raises across the board to every single private employee out there, 4.8 to be exact. unless you're doing well. And now 7.2% if you're changing jobs. But look at the uptick in terms of there's no downtick, okay? Yes, we peaked out. And this is what's remarkable in the same way, okay? You change jobs, you really got rewarded during the peak of the pandemic acceleration of inflation and everything that skyrocketed. But even the number for people that were job stayers, that number, I remember it was approaching 7%, 8%. You're getting 4.8% compounded on 8% and 5%. That's a 20% raise over 3 to 4 years. You know, everyone says, how's it going to happen, right? Credit card bills are rising, et cetera. Costs are out of control. Inflation is everywhere. These numbers are real. This is private payrolls. People are getting raises. This is industry-wide. It's not anecdotal. It's ADP. Nonetheless, strong markets, to say the least. And we were already in positive territory. And you see a little bit of a volatility uptick. You know, we were coming into that number at 6,080. The S&Ps were already higher by 17 points. We're now up by 4 points. So the market just kind of shakes it off in stride. We go forward to Friday's action for the non-farm payrolls, and we'll see where we go from there. Now, it's interesting, and we got a lot to talk about. We just jump around Fed Watch. All right, we were talking about this yesterday. We have yields rising this morning, and it's interesting. We're looking at about a 3-to-1 probability right now that you get a 25 basis point cut 2 weeks from today, December 18th, my sister's birthday, Caitlin. The Fed will be meeting 1 week prior to Christmas, and they're looking at about a 3-to-1 probability that you'll get a 25 basis point cut. Now, what I was doing yesterday, right, and I encourage you to do this, folks, just Google CME Fed Watch tool. And this is the first link that comes up. You click on it, and then there's tabs across the top of this that give you the probabilities of each meeting in terms of how the market is pricing in the probability of a cut. Now, we go out to June, and what's remarkable is the market thinks there's a 75% chance. We're at 4.25% in 2 weeks. Then the market thinks that there's greater than a 50% chance that over the next 4 meetings, we maybe get one cut, if none. And you go out to September, which is 6 meetings after December, and there's still almost a 40% chance. The market thinks they're pausing after December, period. Okay, they think that at 4.25%, they can feel like they're restrictive, let things play out, probably see how the new administration in January is going to contribute to economic factors, good or bad. We will see where rhetoric meets reality, reality meets rhetoric, I should say. But it is remarkable when you look at, and that's why I look at, you know, you say, okay, so you take that conversation. How is the market pricing? The market's pricing in one cut in December. And then, yeah, you might get 1 or 2 cuts over the next 6 meetings, okay? So then where does your risk lie? And we take that conversation and we go over to the 10-year. We have the 10-year, as I just mentioned, at 4.27%, okay? It's fairly priced, as it always is, because the market does not price incorrectly, okay? But it is remarkable when you think about that they're on a pause at 4.25%. The Federal Reserve is on a pause at 4.25% until they figure out what's going on. If their overnight lending rate is at 4.25%, where should the 10-year be? It should be a lot higher than that. Stay tuned, folks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We got markets in positive territory right now across the board. Sad story, man. United Healthcare CEO fatally shot in Manhattan. They have an investor day going on. I mean, this news just hitting at 9 o'clock. Now, this is not, I believe, the CEO of United Health. This is United Health Group's insurance division. And that you pull up the chart, I was wondering whether, you get to dive down. The market says, okay, that's not the CEO, to bring it back. But, man, to bring it over, that's just... Not sure the details, not even sure they're out, but nonetheless, young guy. You never know in life, folks. As my dad would say, right? Yesterday's gone, tomorrow's not here yet. What are you doing right now? Never take a day for granted. And boy, you just wake up on Wednesday morning, Midtown Manhattan, man. Beautiful, right? What is life about when that's the kind of stuff that you got to deal with? But unfortunately, that's the deal. That's a sad deal. Okay. All right. Let's jump around and see what else we got going on. And you talk about movers and shakers. How about Salesforce? CRM is their symbol. And this thing, you talk about a rocket ship, man. You're going to open up 10% at the open. As you have Salesforce, excuse me. Sorry. My computer's freezing up here. Here we go. Okay. You jump into the 15-minute Salesforce trading at 367 and check out the weekly. From 126 less than 2 years ago, we're going to open and almost triple that price point at 367. You back it up longer term. And what's interesting on this chart is, yes, you've risen from 126, but we just broke above this double top. like many equities, right? You really took a digger into the year 2022. Meta comes to mind, etc. We're going to open at all-time highs at $367. They beat on revenue. Subscription revenue beat expectations, and then they had a nice beat across the board there for Salesforce as they're trading higher. And yeah, so we take this one off, okay? And if you're looking at an A to B, C to D from the lows that we just had, you're talking about $400. Nice round number. You're sitting at 367. Salesforce going to catch a little bit of a lift. And yeah, they're giving everything a little bit of a lift. As you got tech stocks, you got Amazon shares. They're going to open another $2 higher. Amazon just Friday was trading at almost 204. You're going to open it by 215 for Amazon shares. You jump over to Meta. Slightly in the red at 612 from 617 overnight for Meta shares. You jump over to Google, trading at 173.60 right now. Apple, the big dog, trading at 243. You got Tesla shares trading at $353 right now out there. Jump over to Dollar Tree with their numbers. You spike up to 83. We're back to 73.40. They earned $1.12 a share on $7.56 billion of revenue. They beat on both. They were supposed to make $1.07 on 7.44, and they announced that their CEO is going to be stepping down as well from his role. All right, and how about in retail this one? Yeah, Foot Locker. So be careful of Foot Locker. And this is, you go off anecdotal experiences, and Foot Locker has defied it for some time in terms of, man, they were a rocket ship. We check out this chart. You talk about volatility on a longer term basis even. Okay, look at this. 79. What do we got, though? We got lower lows and lower highs, right? 79, 68. 66, 71. We make lower lows over that period of time, and we are going to now open at $20. The low last year, $17 about, correlates to the low that we had of $18 back in 2020, and you're going to open down almost 20% for Foot Locker. And, I always wonder who's paying Foot Locker to be a middleman in their shoes. It's a tough spot, man. I was in a nice mall, I said last weekend, right? I don't even know if they must have a Foot Locker in there. Weak consumer demand and steep promotions across the sneaker marketplace is what they're talking about, falling short of the expectations. 33 cents versus 41 and 1.96 billion versus 2.01. They miss on the top and the bottom line. Yeah, and sales down 1.4%. Consumers are showing up for key shopping moments, back to school, etc., Thanksgiving, Cyber Monday, but pulling back in between those events. That speaks to me. It does. Slow demand for Nike. Yeah, Nike's got a problem, man. And when Nike's got a problem, Foot Locker's got a problem. How about that chart on Nike? You're going to open down another $1.50 for Nike shares, down from $180 to $78. That peak high in Nike was with the market at the end of 2021. Nike shares trading back to where you were in 2018. Nike's going to be around, folks, but Foot Locker is trading at prices when I was, I want to say 5 years old. Not quite. Nope, I would have been 6 years old, to be fair to Foot Locker. 6 years old, folks. I had just turned 6 years old. I'm about to be 45, and that's where Foot Locker is. Look at that chart, man. You think to the business model, right? Where is their place in the ecosystem? And, it's interesting. I go through a great mall like the Brandon Mall in Florida. Okay, folks, if you're familiar with it, outstanding mall. I talked about it earlier. They got a carousel in the middle of this mall. Tommy loves it. We go on it. It's a couple bucks a ride. You go on the carousel. They've got all the good anchor stores. They've got all the good anchor restaurants. They got Cheesecake Factory. They got Bahama Breeze. They got Johnny Rockets. They got a steakhouse in there. And there's so many stores that I've never heard of in a mall that size. I find myself as a business person, right, looking at these stores and saying, man, it's amazing that these stores can compete just on the level of foot traffic. I don't even know the names of these stores, but they jump out at you. They have a great presentation. They're all competing with Foot Locker in the same way. Nobody, I think, goes to the mall and says, I have to go to Foot Locker. People do. I shouldn't say nobody. I do my shopping for my shoes online. I do. I buy Nikes. I love New Balances as well. Cole Haan's got some great dress shoes that I love. I buy them all online. Nike's talked about, they deliver to consumers direct, a lot more so than they used to. Now, they got their own issues on top of everything, right? But think about that when you go through the notion of where they exist as a $2 billion company selling shoes for, as they put it, right, in this article, talking about it is a competitive landscape and steep promotions in wherever they said it, right, in the shoe industry. Steep promotions. That's what I do. I look for sales. They do come up. You get those sales for your shoes. I can't handle paying $150 for shoes, folks. Doesn't have to happen when you find some sales. Where does Foot Locker find itself? We're down almost $4. We're coming back for the opening bell. Don't go away, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the market open. Excuse me. And you got the S&Ps. They dip a little bit lower. We're right where we were coming into that ADP number. Remember, we got some strong numbers for ADP, jobs numbers in the private sector. That's ahead of Friday's non-farm payroll number. We were already higher, though, by 17 points. There's your 830 price point right where we are right now in the S&P is up by 17 or about 0.3%. NASDAQ 100 up by 0.7%. That's an all-time high. 21,457. You get the Dow above 45,000. The Russell slightly in the red this morning. Bitcoin up another $230, but off of the highs of about 5 a.m. this morning at 98,000 for Bitcoin. And we got crude at 70.32. We keep our eye on yields. Lower price, higher yield. You're down by 10 ticks. We're talking about a 10-year yield of about 4.27%. And we keep our eye on the dollar right now. Dollar trading up about 50 pennies at 106.57. And we get to talk to our man Teddy Cakestack. Coming up next segment, we'll talk some currencies. Always a good conversation. See what Teddy has to say about this market as we got a little bit of a dollar bid, but we continue to chop kind of between that 106 and 107 area in the dollar, with crude sitting right at about $70 right now. All right, you jump around to some of the movers. Salesforce, strong numbers, but not quite as strong as they were pre-market. Still up 8.6%. As I mentioned, you put this thing on a longer-term time frame. A 1-to-1 A to B, C to D expansion would bring you to about $400. Yeah. Now that's a weekly. I'm going to put it back on a daily. And you got this area from March and April, right? About 300 to 320 is where you're breaking above. The technical high is at about $320. And what's cool here is, right? Here's your high. Let's get exact. 318.71. And what you can see it did is it broke above that area. And what did it do? It came back down and tested that area. I'll just draw. I mean, how perfect is that? Right? That's the high. We back it back out. You hit that high in March. And then on a daily basis, you break above it with huge volume. On November 11th, you come back and test it on light volume, and we've now accelerated higher, and it looks like Salesforce is on its way to $400 as that thing is on fire. We check out some of the other stocks. Amazon, another lift, all-time highs, $217, up 1.7% for Amazon. Microsoft up by 0.9% right now. Google up by 0.3%. Apple shares flat this morning. You jump over to Tesla, slightly in the red, but holding on to those election gains well, sitting at about $350. You back things up for Tesla. We'll see how it reacts. Yes, the highs are technically higher in terms of 415, but you see that this line we're at right now at about $350, that's a nice little area of potentially linear regression. You know, where's the best fit line on this top that you had? And this top was from October to April. It was 6 months you were sitting up here in Tesla. This was not some short-term high. You're bumping up against that area. And boy, that was quite a month on November. But look at some of the volume numbers, right? Look at the volume in November for Tesla with the price expansion compared to some of the volume you got on the way down, or even some of the volume numbers we had early in the days of 2020. Now that's pandemic volatility, okay? But you see the volume we did in July, for instance, almost 3 billion shares. We did 2 billion on that price expansion where it went from 250 to 350. You want more volume on that. We're now talking about a company valued at about $1 trillion, 1.1. Where are we? $1.12 trillion is what we're talking about for Tesla shares. Remarkable. Check back on United Health on that sad story. And yeah, so that's the division group, and it looks like that gentleman, unfortunately, was targeted, the first news coming out there. But nonetheless, the stock higher with the market, as that is just the CEO of the insurance division. And it's like, to even talk about somebody, to say they're just something in that moment is not a good way to put things, because, you know, life. All right, let's jump around to some car companies. Volkswagen. Now, this is, they're going to be a Harvard case study, man. So, let's see what their Vol 3, is that what their symbol is? Let's see what that pops up. That's not it. I think I'm able to pull up the ADR. Here we go. Do you remember the run-up that they had when they were going to go all electric ahead of everybody. And it seemed like, man, it's such an easy play. Why isn't everybody else doing this? And you see those who had restraint. Yeah. Check out that chart. And this one, I think it's out from this morning. Yeah, out this morning on the Journal. Urgent measures needed to save the company. Volkswagen. Man, they make more than Volkswagen, too. It is remarkable. You got 100,000 employees. A third of the company's workforce staged a walkout recently in 9 factories. They got problems, man. Cut workers' pay by 10%. It was what they're talking about, okay? But I just wanted to pull up that chart because I remember there's your volatility during COVID. EVs take over. Volkswagen was on the forefront, and yeah, they have some issues, to put it lightly. All right, we jump back to Foot Locker. Down by 18%. And yeah, like we were talking about, man. It would seem as if the lows of last year are ripe to be tested, of at least about the 1650 area. You had that spike low from August earnings of last year that brought you all the way down to 1484. But longer term, talking about 1986 prices right now, folks. And where do they fit in the ecosystem? We're seeing this happen with other equities. Kohl's. Where does Kohl's fit in the ecosystem, right? We know where Walmart sits. We know where Amazon sits. Walmart, down by 0.3% today. Target, having a problem finding out where they sit as well as you spike lower on their earnings, right? As in, is there enough of an avenue for Foot Locker to remain a middleman where things are changing, consumer behavior is changing? For what it's worth, it's been said you get Target shares negative by 0.7%. We check in on Salesforce shares. How about that one? Up by 10.1%. You pop $33 on the open to all-time highs of $367. And yeah, looks like we're on our way to $400 for Salesforce. Check back in on Dollar Tree on their numbers and their CEO stepping down. Up about 1% right now. We check out some of the airlines. Delta up by 0.9%. JetBlue. Oh, there you go. What's going on with JetBlue? Holiday travel demand. I think I have that article up I was reading about somewhere. Yes, it is. There we go. More post-election travel than expected. Man. Up 12%, and now they expect revenue for the year to be down 3.5 to 4.5 rather than 4 to 5. You talk about a low bar. Nonetheless, JetBlue up by 11.4%. All right, folks, stay tuned. We're coming back. We're going to talk to our man, Teddy Kegstad. We'll talk some currencies. We'll talk some yields. We'll talk some commodities. We'll take a look at crude and gold. Stay tuned, folks. We'll be right back with Teddy.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, He has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the market just holding on to the gains right now with the S&Ps up by 17 points. We jump over the dollar DXY. You're up by about 500 ticks at 106.557. And as we do every Wednesday at 40 past the hour, let's jump over to our man Teddy Kegstad. Folks, you can check out Teddy's outstanding Tiger Forex report. He puts out new issues every week. It's only $97, and it comes with a 30-day money-back guarantee. You get a webinar archive in there as well. You can just subscribe under the newsletter tab at TFNN, $97, 30-day money-back guarantee. And let's kick it off. Teddy Kegstad, good morning.
Good morning, Tommy.
So we are 2 weeks out from a Fed meeting, and we got a little bit of taste of some jobs numbers, decent jobs numbers, the wage numbers, decent wage numbers, man. In those private payrolls, we get the non-farm payroll numbers on Friday. We've seen a little chop in these markets like we've been talking about. I got the dollar 106.56 kind of chopping around. What are you watching most in this market right now, Teddy?
Well, I'm liking the move we have in the Australian and the New Zealand dollar. They're falling out of bed pretty good today. They have a very nice move, and I think that you're going to see a little bit of divergence between some of the basket of major currencies over the next not just couple sessions, but maybe the next couple of months. So no matter where the dollar goes, I think that you're pretty much establishing that the bear trend in the Aussie dollar may be not just here to stay, it's just the beginnings of a collapse in their currency.
And what is there? I'm unaware. That's why we talked to you, man. Is there a fundamental? There's obviously, usually there is, but before I even ask you, what's going on with why I'm looking at the chart, man. That is quite a move. What is going on there?
Well, I think they're having some of the issues that Canada's having, but even worse. They're becoming, to quote Mr. Wonderful, like how he said with Canada or with California and certain other states, they're becoming places where business can't go to do business, period.
Okay.
So, and I think that, Australia and New Zealand were really hard on our people during the COVID lockdowns. Australia has passed a lot of measures that recently, they're doubling down on a dystopian society. I mean, now the thought police are running things. They're banning people from coming to their country, and these are people who haven't committed any crimes. They're not criminals. They're just people who have a point of view that the government doesn't like. So when you have that becomes it becomes an obstacle for business, and I think that you're going to see more and more of that, because as the government puts on these restraints and businesses can't function properly, well, what does that do to the Australian economy? Sure. And I think it's really starting to show that unless they turn a page, and there's a lot of disruption in their government right now. They're trying to turn things around. And I think until they do, you're going to see that currency start to weigh. No matter what, I was telling you before in a couple of weeks back that dollar strength now is not necessarily reflective of dollar strength. It's more of a reflection of other currencies' weakness versus the dollar. And I think you're going to see that, especially in those like the New Zealand, the Australian, the Canada. I think that the pound, you're going to still see some issues. The Japanese dollar, I think you're going to see diverge from a lot of the other currencies. I wouldn't even doubt that they have a potential to be, they're going to hold pretty strong. I think that, we've seen them, the US dollar, JPY, get to some very high levels. We've been bobbling around the 150 mark for a while, and that's in lieu of us having, cut rates. I think we still have, I would think another rate cut coming with the Fed, in the next meeting. I am assuming that for the most part, they'll do a quarter point, not more, especially when you look at ADP numbers and other employment numbers that are ticking, towards lower unemployment, and if that does continue, that throws off the Fed's narrative on cutting rates because it's inflationary, right? At least according to their model. So I think that's going to be an interesting trade. I would look forward to a quarter point in 2 weeks, but don't have your expectations that you're going to see another rate cut in the next 1 to 2 meetings. I got a feeling that they're going to pause if the numbers keep tracking the way they're doing. You know what I'm saying? Like if we have very strong numbers going into January, into the first quarter, as far as like low unemployment, for instance, and God forbid there's some wage growth, instead of wage contraction, I think it's going to put a lot of stress on them to at least, if they continue to cut moving forward, they're going to stay on a quarter point basis at a time. They're not going to be very aggressive like they started off, and then I'm very leery on being a big buyer of the bonds and the 10-year, even though they're going to cut rates. We've talked about this before, that the banks their margins are going to go up. The Fed's going to continue to cut, but I wouldn't be too hyped up on getting your mortgage refinanced at a much, much, much lower rate, even 6 months from now. So, anything can happen. We'll see how it goes. But if you look at how mortgages are right now and how they've moved, it's not reflectionary of a 3/4 point cut, right?
Sure.
And I think that this is something you have to keep a beat on. Like, there's rubber band effects in the markets. This is not a rubber band effect situation. This is where fundamentals are outweighing each other. You're seeing where the weight of fundamentals are. So yeah, on a very core basic level, you think you cut rates, there's an inverse relationship. Bond prices should go up, 10-year prices should go up. That is the case, but right now I think that you have all these other fundamentals that are restricting that. So what it's doing is it's holding back those bulls, if you will. So they're going to keep on moving back higher. I mean, let's take a look at, if you look at where the 10-year and the 30-year are right now. I mean, you're sitting at, our lows were set just, a few weeks ago, meaning price, meaning higher yields.
Yes.
Okay. So, and as far as where we're sitting right now, if you go back to September when they first started cutting, I mean, you're looking at a difference of 10 to 12 handles. Okay. Why are we not trading at least 8 handles higher than we are right now? I mean, if you just look at it on a fundamental and technical level, if the rubber band effect is there for these different relationships, the floor should be higher right now, and it's not. So that it's not just that the market's commanding higher rates. I think it's also showing you that this trend, no matter what the Fed does, they're not going to be able to move this market the way they had before, is what I'm saying, And I think the currency relationships have a little bit to do with that as well. Just how interest rates are a function of currency pricing. Currency pricing can be a function of interest rate pricing as well, And here's another thing too, is you got to look at how businesses are looking at their future. I had a really good conversation with somebody the other day about, a year ago, most people were looking at the forecast of where they would be a year from now, meaning right now. The outlook for most people was very pessimistic, okay? This year, people who were pessimistic a year ago, it doesn't matter what side of the fence you're on, are very optimistic about sales, maybe not necessarily growth, but the business should be running along at a decent pace, meaning not retracting. So that's a big thing. If this is the case, that's going to keep stability in the dollar. It's also going to give dollar strength as well as we move forward in the new year.
I love the way you walk through it, man. Can you hang with us for one more segment?
Sure. All
right, we'll come back as a talk. I was looking at those yields. We were at 3.6% almost on the 10-year on September 16th, right? Remarkable, man. Folks, stay tuned. We'll come back with Teddy. We'll finish up the conversation. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 20 points, just kind of chopping around since we opened in positive territory. We're talking to our man, Teddy Kegstad. Don't forget to check out Teddy's outstanding Tiger Forex report, folks. You see the way he walks through those currencies, much more than just talking about the dollar in terms of what's going on. And yeah, as I was saying, Teddy, finishing up, and, like I said, I love the way you go around because everything is so related, and correlated or uncorrelated, at least related to a degree of how everything moves. And it is remarkable when you look at 3.65. I couldn't believe it myself. I looked at that yesterday. I said, man, yields were at 3.65 back then. As in, how did they get that low in the same way that you're saying? As in, it's tough for me to see how the rates are going to go that low when where we are right now in this market, where everything's lining up. I wanted to ask you about crude. So we got a little bit of a lift, but crude. I like these gas prices, man. Paying about $3 at the pump here in Tampa. We're sitting at about $70. What do you think about crude?
I like it. We bounced off the lower part of the range we've been trading in a couple days ago. We set a higher move low on Monday, and I think right now we're looking to kind of maybe push back up towards that $70 a barrel and then fall back on it. It's giving a nice slow rally to the yen today, because we've had a 3-day rally going on in crude, and we have a 2-day sell-off now in the bonds and 10-year. The yen stabilized yesterday and spiked into our downside corrective zone. And now it's rallied back above the monthly directional pivot, which is that 150 area that we've been talking about literally now for over a year, So, and I think that right now, if crude continues, now, I told you before, I would not be an aggressive bull or bear in that market. I think it's going to be stuck in a range trade for months. As we push up towards that $72 level, I'd be careful about, being caught on a spike high head fake, I think that's very, very possible. I could see the yen rallying another 2-3 handles, especially if interest rates stay firm, and you see that also rallying in the crude market.
Teddy, I appreciate the time and the update as always, man, and we look forward to talking to you next week.
Sounds good. Take care, Tommy.
Thanks, Teddy. Folks, check out that Tiger Forex report. Outstanding report every week by Teddy. Stay tuned. We got our man Basil Chapman coming up next. Thanks so much for kicking your trading day off right here at TFNN, and we'll see you